All right. Good morning and good afternoon to you, depending on what side of America you're on. Welcome to the Monday morning sales training call with Symmetry Financial Group. My name is Ian Graham, agency director here with Symmetry. I am direct to the awesome Sterling Gatling, part of the Skeen, Alderson, Cloutier, Spieldenner, Delaney, Pritchett hierarchy. Very blessed to be so, and just want to share a debt of gratitude to Casey and Brandon and Brian for creating this amazing system called Symmetry Financial Group that we're able to grow and learn in, and to go out there and protect families and protect our own while we do it. So for those of you, I like to know who's speaking at me when we're on these calls. Just a really brief intro of my background. I'm a former school teacher, no illustrious sales career over here. Taught second grade school and was in the elementary realm for about 7 years prior to working with Symmetry Financial Group. So if I don't know you yet, I look forward to meeting you in Denver and getting to shake your hand. But I'm really excited about this call today. Winners or trackers? We're going to dive into things here and really get into some nuts and bolts. Before I do so, I want to edify the two individuals we have on the call with us today, who are Kip Kemboi and Marin Degefu. They're both key leaders. They both qualified as key leader just in the past 2 months. So Kip qualified in July and Marin qualified in August. A little bit about Kip. Running just shy of 100,000 submit business APV as a key leader. So I know agency owner is going to happen before Denver. Just in this last month of September, he wrote 30,000 APV on his own pen. So not only does he know how to write business, but he also knows how to create and cultivate a team. On Marin's side, she just started with us back. Her first month was May. And so she's only been with us for 5 months, and she just qualified key leader in August, running over 60,000 as an agency, and wrote 29,000 on her own pen in September, and will also be AO by Denver, which is really exciting. Between the two of them, they actually share their business partners. They share an office, and they just leased out an office, the newest office in the Delaney Agency as of last month in Houston. So really exciting. Before I get into some kind of the intro of the call, and then we'll pass it off to you all, because I want to learn from both of you. We'd love for you guys to give a little quick background of you and where you come from. So Kip, why don't we start with you first, and then we'll go over to you, Mary.
Thank you, Ian. My name is Kip Kemboi. I'm direct to Ian Graham and the Alderson, Cloutier, Spieldenner, Delaney, Pritchett hierarchy. Very grateful to be so. Located in Houston, Texas. I've been in Symmetry for going on 3.5 years. Previous to Symmetry, I graduated with a degree in sports psychology. I trained athletes as a sports performance specialist. Fell in love with the culture here at Symmetry and the leadership that it provided. And I'm excited to collaborate this call with Mr. Ian Graham himself and my business partner, Meron Degefu.
Good morning, Symmetry family. My name is Marin. I'm directed to Kip Kemboi in the Graham, Alderson, Cloutier, Spieldenner, Delaney, Pritchett hierarchy. I'm so grateful to be here. My background is I graduated with civil engineering and geophysics. I worked for an oil and gas company, and after that, when the market crashed, I worked for AT&T as a sales person for them. And then I ended up joining Symmetry because of the work-life balance and not be able to work like 70 hours a week or door knocking on businesses from Monday to Sunday. So I'm so happy, and it's something that was caught for me. So I'm so happy and grateful to be here.
Absolutely. And we are grateful that both of you are with us. So topic of our call, winners or trackers. If you speak the 5 voice language, if you're a guardian personality, you are absolutely going to love this call. If you are not a guardian, you probably need this call. And so this is meant for all of you. So take out a notepad and pen if you don't already. If you're driving, please don't do that. But if you have a stopping point and you're able to pull off, these two have a really good call lined up for you. Before we do that, I want you to go back and think back in time to your high school track around the football field. Probably in PE class, you're required to run a mile race. Some of you may have ran it, some of you have sprinted it, some may have walked, some may have jogged, some may have crawled. Hopefully not that, but if you can remember that high school track, 4 laps around the track, around that football field, are 1 mile. And the Symmetry learning curve here is kind of like the 4 laps of that mile, except here speed doesn't matter. As long as you're moving forward, you're going to master the 4 skill sets necessary to succeed at a massive level here, as long as you're going forward, as long as you don't go backwards. I don't care if you're sprinting or crawling, you go forward, you're going to eventually complete 4 laps of a mile. And it's important to only compare yourself to you, not to other agents. We're all running our own race here, following that same lap, following that same track that Symmetry's already set up for us. And so you have to only compare yourself to you. Are you becoming a better you? On those same lines, just like you should be 100% confident in your ability to get around that track 4 times, you should also be just as equally confident here at Symmetry and have the belief that you can master the SFG learning curve, which are really 4 skill sets, kind of computing to those 4 laps. It's just going to take some MACC, massive action, constant correction. So here's those 4 skill sets that we're really going to hone in on today that relate to those 4 laps of the mile. And those 4 skill sets relate to very trackable metrics, trackable ratios. And if we're tracking our numbers, then we're able to understand where our strengths are, where our weaknesses are, what those deficiencies are, what we need to coach up with our mentor on. That first skill set, lap number 1, learning how to book appointments. Learning how to book appointments, the ratio there that's attached to it is contact to appointment ratio. Lap number 2, learning how to get those appointments to actually show up. So you can sit with the family, whether we're running appointments in person or virtually, actually having them show up. That ratio attached to that skill is the sit ratio. Lap number 3 of the mile here, learning how to make a sale to protect a family. And that lap relates to the close ratio. And then finally, lap number 4 is learning how to get apps approved, which is the net placed ratio, approved and stay on the books. And so those are the 4 skill sets that we need to master here. And as long as we continue to move forward with MACC, it's a guarantee we're going to master them. It's impossible not to finish the mile. It's a mile race, ladies and gentlemen. It's impossible not to get around that lap 4 times. And you need to believe that. You need to have the utmost confidence in yourself that you will complete those 4 laps as long as you continue moving in that right direction with guidance from your coach and mentor. So those are the 4 skills that we're going to talk about today. As far as tracking, if we're not tracking our numbers, if we're not keeping track of the stats, if we're not really analyzing all of this, then we're hobby leveling this business. Now, this is a business that can take you from, as Brian Delaney always says, it can take you from earning $75K a year to $75K a month in just a few short years. So let's not hobby level something that's that powerful, that can change our life and lives around us that dramatically, just because we're too lazy to track. So if we're not tracking, we're just kind of guessing. I have agents sometimes that say, oh, I need help in the home. I'm not making any sales. And then we actually take a look at, we use Google Sheets here. We take a look at what their numbers are. And it's not that they're having a problem with the close ratio. It's that they stink on the phones right now. They need to get better on the phones. So we need to hone in on the phones. And they're expecting to get results on lap 3 when they haven't even completed lap 1 yet. And so those numbers, when we track, when we know what our numbers are, it allows not only us to self-reflect on those and to be able to analyze what we're good at and what we need to become better at, but it also allows our coach to actually coach us based off of facts instead of based off emotions and feelings. And that's the way that your coach needs to be able to coach you in order to help you get to the results that you're looking to get. And so we need to track. If we're not tracking, however you're going to determine to do that, we need to get on it. I'm really excited to pass this over to these two for them to pour in on those four skill sets. Again, skill number 1, learning how to book appointments. That's our contact to appointment ratio on the phones. Skill number 2, learning how to get those appointments to actually show up. That's our sit ratio. Skill number 3, learning how to make a sale to protect a family. That's our close ratio. And skill number 4, learning how to get apps approved and stay on the books, which is our net place ratio. So Mary, I'm going to pass this over to you.
All right, thank you, Ian. So The first thing is like sticking to the phone script on the best script. It's there for a reason. We all like sticking to a system, right? And then the script has been there for like 12 years. So we know it works, right? So it's not like we're trying to make it our own or anything. It's just we know that the system works. So, and then like you said, massive action, constant correction. So first of all, let's talk about what is massive action, right? How many dials are we doing per hour? So averaging almost like 30 to 40 dials per hour. And then that is one of the points for massive action. And then the second thing is how many dials are we doing per week? Are we aiming for like 300 to 400 dials a week? I have some of my teammates that are doing 750 dials in a week. And then that is massive action. So that means that we're putting in the work. So how do we correct it? Constant correction, right? So if we're dialing and we're having 5 contacts, for example, and we're not actually booking an appointment, so there's something that we're saying that is not adding up to the families, right? So what we developed as a culture is if you're new, especially every 5 people that you talk to, you reach out to your applying, where's the tweaks that we can make, or where's the misunderstanding that's happening. That's the constant correction. And then the second thing that I would say is having the intro low and slow. I'm gonna be honest, I pretend like I'm so bored out of my mind when I call them, in a sense of like, I'm busy, you know? Hey, you know, this is Marin, like so low and slow, that would actually help out. And because normally telemarketers, what they do is like, they're excited, or they will tell you saying like, hey, Ian, this is Marin, right? And then you're like, no, thank you, right? But if you're very low and slow, you can actually be able to get their attention. And then constant correction in the sense of, what's our resolution? Like we get leads every week, and I'm pretty sure all of us are here because we want to make the most out of our money too, right? So our ROI. So normally we shoot for like 80% resolution, right? So the more you resolve your leads, the more you actually be able to find out whether it's a no or whether it's an appointment, and tracking it, that would actually be able to help you improve your business. In the sense of like, okay, so if I have like the last 3 weeks, what were my numbers like? How many of them I have resolved? And one thing that correlates is if you have a good resolution, you're probably going to have a good sit ratio. So that's one thing I found out also. And then when we talk about, and then to be honest, like people buy from the people that they trust, right? So when we talk about the sit ratio, we have like both of them. We have a virtual that we do, and then we have the in-home one, right? So normally our team, like 90%, we do actually the virtual one. And when it comes to sit ratio, the first thing is the tie down, right? So we use a Calendly here. So when it comes to tying down, like at the end, first of all, like you want to make sure that you're going to dig out the why. Because if they tell you saying like, why are you looking to get this protection? Oh, if something happens to her, then, or to me, then, you know, I want her to be okay. I used to be the type of person, I will say, okay, all right, so what would be the best email to reach you at? And they don't show up because the why wasn't there. I didn't dig in the why. But now asking why do they want to get the mortgage protection insurance? Why is it important to them? Who will be affected the most? And what would their backup plan be? I will always ask this. I take my time, like 8 to 10 minutes it might be, or 5 to 10 minutes it might be. I try to find out what do they want to get out of this? So that would actually help on with the tie down. And then the second thing is making sure that you make them right who you are, right? And what time our appointment is going to be, and then their doctor's information. And I also tell them saying like, this is going to be on a recorded line. If I'm sitting on Zoom, I record it. If I'm doing a phone appointment, then I'm going to make sure that it's recorded. So I tell them this for security purposes, we want to make sure that we're recording it. The reason why I'm recording it, it's for security purposes, but not only that, I will be able to see later down, like how was my posture? So since I tell them that, they would trust you enough when you tell them that. The second thing is when I send them, we use, like I said, Calendly, right? So when it comes to Calendly, one thing you can actually customize it to a point where that they can get an email 12 hours before or a text message an hour before. So the Calendly, the software is already doing the job for us, but at the same time, I'm letting them know, saying like, hey, write it down. And then when I send them the email while I'm on the phone with them, I make sure that they open the email, they respond to it. And then do you see those links? That's a Zoom link. If you don't have it, make sure you're going to download it. And make sure you have your doctor's information. Make sure you have your driver license because I have to verify you. And on top of that, I send them my driver license and my state license agent ID at the same time. So they know that they're talking to a professional that was signed for them. And when they sit down, they're comfortable talking to me about what they're looking for. And one thing I will say is like your personality would come out, right? Like when you're talking to them. So, and we have like, I was actually reading on Symmetry, there is a saying that if you make them laugh once, they book the appointment with you. If you make them laugh twice, they will sit with you. If you make them laugh 3 times, they will actually be able to buy from you. So that's one of the things that I learned. And I remember making those 2 mistakes. The first one was booking up. So I'll tell you this. I booked 22 appointments in a week and 7 people showed up from 22. So I was wondering what was going on, right? So I sat down with Kip and Ian too, and we found out that I was booking 4 to 5 days ahead because I didn't have the posture to say I only have this availabilities. I was busy. So I was telling them, oh, I'm dialing on Thursday or Friday. And they would tell me saying like, oh, Thursday is the only day that I will be able to make it. Okay. And 7 people only showed up. So we fixed that. So making sure that we're booking those appointments like in 24 hours to 48 hours. So they remember that we booked that appointment. They're getting the reminder. And then next week after, I booked 20 appointments and 17 people showed up. So the difference, that's one of the things that I learned also, a big mistake that I learned. The second thing was running a one-legged appointment. So I sat down with them and then I'm asking the husband saying like, oh, is your wife going to be able to join us? No, she's sleeping. You can talk to me though. Okay. I run through the whole presentation. And then at the end I get, oh yeah, I got to run it by her. So now having a posture of saying like, if I get a one-legged appointment, I'm going to tell them saying like, unfortunately, sir, I cannot be able to run the appointment. I got to make sure you guys are both available since you both make the decision. I only have this availabilities for the next 2 days. Which one works for you and your wife? So having that posture too, that's one thing that I learned. So everything correlates and making sure that you track all of your numbers, whether you're booking appointments, your dials, and numbers don't lie. So they will tell you exactly what, you can't tweak the numbers. They will tell you exactly where you're making a mistake and exactly where you need to tweak it. So I'll pass it to Kemboi.
Really good job there, Marin. And you're right, numbers do not lie. So like if you ever feel uncomfortable, look at your numbers. That just means it's an opportunity to improve those. So lap 3, what that covers is writing applications in your close ratio. So if you're tracking those numbers, it should be at least a 50%. People buy from who they like and trust. Symmetry's done a really good job with the REAL system, which stands for rapport, emotion, application, and lock it down. So if you're struggling with rapport, easy reminder is there's actually an acronym called FORM. It stands for family, occupation, recreation, and motivation, or me. It's a very easy way to break down that barrier and kind of establish that common ground so you can have a conversation with the client. So what's the number one obstacle of close ratio? It's gonna be think about it. So, how to prevent and think about it is having a strong role and purpose. You want to set the expectation of what's going to be done in the meeting. Really good audio to listen to. Cicely and Ayers Newsom, they have one that's called In the Home, Setting Up Your Role and Purpose. Everybody on my team, we listen to that, and it's created a very strong need and why and exactly what we're doing in the business from the start of the appointment. That sets the tone, but a good role and purpose will establish who you are, who you're working with, and what's going to be done today, which is an application is going to be taken. Like I said earlier, families buy from who they like and trust. But there's also an intersection between price and value. When those crosshairs are met, they're going to be buying from you, and they're going to feel comfortable moving that direction. So how that's established is through a strong financial fire drill. You want to dig into the why questions. You're uncovering it and revolving conversations around the why early and throughout the conversation. Ryan Frederico, he had a very strong training call he did on a Wednesday call, talking about asking for business 7 times in the appointment to create that need. That's a very good call to review if you want to go ahead and look into how to ask for that business multiple times in an appointment. So moving on to lap 4, that's where apps are approved and they stick. That's net placed. A healthy net place ratio is going to be about 75% or higher. 3 numbers that you're tracking to determine the health of your business is submit, which is the raw number of appointments that are being sent or applications sent through opt into the carrier. Issued, which is business that's approved by the carrier and put in force. And the most important really is net placed. That's the persistency. That's the difference between your business that you submit and what actually stays in force. One thing that sets Symmetry apart is this company focuses on the net placed numbers. It's the most important number because that's what we use to protect families, as well as how we get paid and get promotions as agent. So in the beginning of my career in Symmetry, share a little bit about me. I did not have the best net place ratio. Ian knows this. I had like a 30% net place ratio coming out, and I could not figure out why. So I sat down with Ian. I was like, hey, I'm sitting with these families. I'm trying to figure out why is it that I'm putting things in place, and then when I see a phone call from a client, I'm scared to pick up because I know they're calling to cancel or change something. It has a lot to do with expectation. And through those phone conversations and establishing things like sending out postcards and setting up needs and figuring out what they need after the appointment, my net places went from 30% my first year, 50% my second year, now it's 80% here in my third year. So very important topic. What can cause a low net place percentage is improper field underwriting. First thing is health. You want to make sure you're asking the why questions, but also digging into their health. Understanding if there's anything that's happened in the last 10 years, any hospitalizations, medications that may have been prescribed but never taken. Those are things that'll pop up on the MIB report. Number 2 is cancellation. Now that's one that, is not fun, but usually comes again because the intersection between price and value is not met. So one thing I've done and I learned from Ian was the internet cable test. So if you ask your client, hey, 6 months from now, let's say like your transmission or your tires went out in your car, would this be something that you wouldn't be worried about or you could keep in place, kind of like your cable internet, even though we know it's more important? So asking a question like that puts the sense of importance on the product, but at the same time, you're finding out if it's a good fit for them. So moving forward, if they say, yes, I know it's a good fit. If I get a little bit of hesitation, we're going immediately down to that option 3 and seeing if that's a better fit. The last thing, which is very important for net place, is trust. Expectations after the sale. You need to do what you say. So after I complete my applications with a client, first thing I'm letting them know is, hey, there's 3 things that can happen here. First thing is it can be approved, which is the best case scenario. Number 2, it can go into pending, which means there's some requirements that need to be met. I might give you a phone call in about 2 days or so, figure out what those are. Or 3rd, it can get declined. If it gets declined, that's okay because we have on option B, we have plan B available. Don't worry about that. But typically underwriters take about 24, 48 hours, 2 business days to get back to us. So I'll be reaching out to you around then. At that point in time, your client knows they're going to do something. You need to follow through and do it. Whether it's going to be, you told them via text or via phone call, you got to follow through with that word, because that's another place where lack of trust can cause a sale to not go through. So that's kind of the essence of keeping business in place. We also do a few other things as well. We know that sticky business happens because of either you're adding more value to the family through more applications, just doing one thing, liken it to a bank. If you go to a bank and just get your checking account opened, but another bank will have checking, savings, you can get your credit, your mortgage, you're going to most likely go with that bank because it has more value to add. On top of that, how you know you did a good job is if you ask for a referral and you get them. So one thing that we focused on in the Graham agency, as well as the Pencil agency, is after sale referrals. And this is actually going ahead and asking for more families to protect, because if someone's going to give you family or friends, they definitely enjoyed what you did for them. So that's all from me, Ian. If you want to pass it back to you.
Awesome stuff, you two. I appreciate it. I appreciate both of you being vulnerable and transparent with some of the struggles that you've had here, just like all of us, right? We all have our own journey. Keep in mind, ladies and gentlemen, that as we go through our SFG learning curve and we travel through these 4 laps, not to compare ourselves to others, we're only comparing ourselves to ourselves. And are we making our best better on a daily, weekly, monthly basis? And if we are, we're moving in the right direction. Eventually, we're going to complete that darn mile. We're going to complete it. As a final reminder, those 4 skill sets and those ratios to track in order to improve those skill sets. We need to track the ratios, track the numbers, so that we can improve those skill sets and be able to coach up with our mentor. And our mentor can actually coach us instead of guessing. Number 1, learning how to book those appointments. That's that contact to appointment ratio. Number 2, learning how to get those appointments to show up, which is our sit ratio. Lap 3, learning how to make a sale to protect the family, is that close ratio. And then lap 4, finally, is learning how to get apps approved and stay on the books, which is the net place ratio and the most important. So thank you all for tuning in today. Let's go out and crush it this week. Let's keep setting records here, Symmetry Nation. Thank you, Brandon, Casey, and Brian, for allowing us the privilege to pour into you all today. And let's go kill this week. Take care.